That's my quant.
Your what?
My quantitative. My math specialist. Look at him. You notice anything different about him?
If you think quants are just math nerds crunching numbers in the back office, you're only half right. But what exactly is a quant? Well, if you ask most people,
what do quants actually do?
Right. Code and do maths.
Well, great. This has been a lovely interview.
A lot of math and a lot of computer science. As a quant, a signal in the market is just anything that can happen that we think is predictive of something else. The signals that quants excel at are things that your average banker would never in a million years notice. Things that are buried into the math. Stuff you can only find with big amounts of data analysis and machine learning.
Today we're going to demystify one of Wall Street's most misunderstood roles. And trust me, it's probably not what you think. Let's start with the basics. Quantitative simply means measuring numerical data. But in the world of finance, it gets a bit more interesting. There are actually two main types of quants. Quant analysts, these are just the number crunchers, and quant traders. They can be the number crunchers and decision makers. And here's where things get convoluted typically. They're very different roles. Picture this. You're a finance, mathematical, or scientific major who just landed an internship as a quant analyst. You think you're about to become the next Renaissance technologies. But instead, you're doing what I like to call Excel athletics. Here's what quant analysts typically do. Study fundamental financial data, compare company metrics, look at historical price movements, build statistical and probability models. But wait, you might be thinking, isn't that what makes you money in the markets? Here's where I'm going to tell you something that might shock you. In actual hedge funds and investment banks, quants often get a bad rap.
Quant is another word for systemized ordered thinking represented in an algorithmic approach to trading.
Just remember, Billy Beane never won a World Series.
If I had a few more minutes...
Forget it. Tell me why you're here.
My system mimics human peak performance. It's a decision pattern algo me and my team are developing. It'll be able to examine data sets and mirror your own trade logic in its executions. I can model Taylor's trading patterns at 10 times the speed.
My trading patterns are imperfect.
They're pretty fucking good.
Yes, but I don't want a pretty fucking good algo.
The way that you would imitate Taylor's brain is by studying it, right?
Yes, modeling, as I said.
He wants to steal your fucking brainwaves. Like a witch doctor.
I don't need something that thinks like me. I need something that thinks better.
There's actually an old Wall Street joke. I've developed a system that perfectly predicts last week's market moves. You see, there's a huge difference between understanding what happened, which obviously is easy, and knowing what will happen. Professional quant trading is like a chess game where the rules keep changing. It requires pattern recognition, creativity, something computers still can't replicate, forward-thinking analysis, risk management, and ultimately portfolio management techniques. And here's the difference. Professional traders don't just react to the market, they anticipate it. Macroeconomic shifts, Fed decisions, global events, sector rotations when money moves from between sectors, company-specific catalysts, and here's something that most people don't realize. Some of the most important data isn't just numerical. Questions like, who runs the company? What's their track record? What stage is the company in? These are only just a few things considered. Now, I know what some of you are thinking, but what about algorithmic trading? A lot of retail traders, retail hype traders, are just popping up saying they've unlocked the secrets of algo trading.
Algo trading is revolutionizing the way we approach the stock market. Imagine a computer program that executes trades based on complex algorithms, analyzing not just prices, but also timing and volume. It's like having a supercharged assistant that never sleeps.
Done for you, automated trading. usually on indexes or stocks, and heavily reliant on chart indicators such as RSI or MACD. Buying when oversold and selling when overbought. Just because something is oversold doesn't mean it can't get more oversold. Just ask anybody who tried to catch a falling knife in a bear market. The problem, just like the quant analysts who solely rely on past data, backtesting with specific parameters doesn't guarantee future performance. Markets are constantly evolving, and yesterday's patterns might be tomorrow's traps. So this is where you can fall into the backtest bias. Think of quant trading like a pyramid. At the bottom, you have fresh graduates with mathematical related degrees. Focus on pure mathematics. And they love to brag about their roles and quant models on social media. In the middle, you have quant analysts at firms building complex models, looking for statistical and probability edges. And at the top of the pyramid, you have experienced quant traders who blend data with market understanding and know models are just tools, not crystal balls, and just part of the multifaceted process. If you're serious about learning quantitative trading, I've created a comprehensive resource bundle that shows you how to blend data analysis with real market understanding, the way actual hedge funds do it. First link in the description. On November 23rd, I'm hosting a free workshop called The Quant Trader's Black Box, Thriving in 2025. What a year we've had in the markets. If you haven't noticed, smart money sentiment is shifting. Loads of opportunities are broaching in these coming macro and corporate shifts if you know where to look for them. Major catalysts are coming in GDP dynamics, regulatory frameworks, global trade, geopolitics, interest rate environments, onshore manufacturing, and energy. But here's the thing. It's not as simple as following and then reacting to the headlines. That's where the old adage is buy the rumor, sell the news. Sell the rumor, buy the news comes into play. That's why I've developed the Quant Trader's Black Box, a sophisticated yet accessible framework for identifying and capitalizing on these shifts before they happen. This isn't reliant on the hope and cope of the Trump presidency exclusively. We've been seeing a shift in the macroeconomic conditions, and new catalysts are on the horizon for 2025. As a turncoat quant trader calling the past several market rotations, instead of getting caught up in the political theater, I'm positioning for the next market rotation. Saturday night, November 23rd, I'm hosting an exclusive workshop where I'll hand you my exact training plan for 2025. You don't need 4 different monitors or Bloomberg terminal or tech savviness. You don't need complex algorithms. What you need is a systematic framework for pattern recognition and derivatives trading. And that's exactly what you'll get. Inside the Quant Trader's Black Box workshop, you'll discover how to build your own quantitative framework, our exact process for identifying market rotations, the pattern recognition techniques that we use to spot opportunities early, risk mitigation and management for building and preserving your capital. Plus, all attendees will get access to the Quant Trader's Black Box Bundle Kit, your complete guide to navigating the 2025 market landscape. Join us Saturday, November 23rd, live at 2 p.m. Eastern Time. The link is below to join. Don't miss this opportunity to position yourself ahead of the major shifts coming in 2025. Hope to see you inside. Do professional traders use algorithms? Well, yes, but mostly institutional traders at investment banks. Here's the truth. Even the best trading algorithms are really just fancy execution tools. They don't generate trade ideas, adapt to changing markets, or replace human judgment. These algorithms aren't trying to predict the market. They're designed to calculate capital allocation and execute large orders efficiently without moving the markets too much. So if a quant analyst doesn't know caveats and idiosyncrasies of the financial world, they don't know how to properly measure how their data is skewed. So the real quant traders, they're not like these guys bragging about their Jane Street internship, about how their models are perfect. The real quants just see their research as a hypothesis, not an absolute. Rather than trading solely based on statistical and probability models, the real quant traders implements diversification of trade ideas and risk measurement to hedge unforeseen risk. Real quant trading isn't about having the most complex formulas, finding perfect arbitrage opportunities, or running the fastest algorithms. The best quant traders have something that no computer can match: market intuition refined by data, deep financial understanding, and skepticism of their own models. Think of it like a chess master using a computer. The computer shows possibilities, but the master makes the final decision. So next time someone tells you they're a quant trader because they can calculate standard deviations, remember, real quantitative trading isn't about having the fanciest formulas. It's about combining data, experience, and discretion to stay ahead of market moves.